time in the night, right? The midnight, the graveyard shift. They say the early bird gets the worm, but we rarely get sleep. Mm-hmm. Mic check though. I'm gonna do a mic check one more time, y'all. I'm trying, let me know something. Can anybody in the chat say yes, we can hear you, Ninja? No sound detected. Mic check. 1 2 1 2. Come on, y'all. Y'all gotta let me know if y'all can hear me or not. Okay, Southern Theory. Thank you. I appreciate it. Let me put my phone on Do Not Disturb before I get started. Yes, we can hear you. Okay, cool. King Reed, what up? Okay. All right. So we're gonna start out by first of all, I wanna. Oh no, kind of got above myself. We're not gonna start out with this. We're gonna start out this way. We're gonna do it this way. This is how we're gonna do it. Can y'all see my screen? I need to have TikTok pulled up on a separate device so I ain't gotta ask y'all. I know y'all tired of me asking. It's alright though. We're gonna engage. It's the only cost of admission. Engage with me. How you doing? Did you eat good tonight? Did you eat good this week? Did you trade this week? What you made this week? Did you lose? Did you make sure your losses were small? If not, that's what we're gonna make sure we do next week though, right? Right. All right. So I want to talk about market structure, but I want to talk from a point of view like y'all don't know nothing, right? So if you already know market structure and how to use trend lines and how to spot a trend and how to spot a reversal, then cool. Congratulations, right? But for those that don't know, I'm gonna get you to that level. Okay, so the first truth that I want you to realize tonight about trading, right? Let me tell you something most people don't hear when they first get into trading, okay? The market does not care about your opinion, right? It don't care what you think. It don't care that you think it's gonna go up. It don't care that you think it's gonna go down. It doesn't care. It does not care about your prediction. All right. So it don't care about what you think should happen. The market is only going to show you one thing. I'm gonna wait on some people to get in here. I got a few more friends. I'm waiting to get in. Y'all do me a solid one and share the live to your story, okay? And while I'm yapping, I need y'all tapping. It helps me tremendously. I can't stress that enough. It pushes my live out to a larger audience. Let me fix my microphone. Oh shit, that was horrible. I'm sorry. Pardon me. I got a new setup, new mic, so I gotta get used to it. All right, this should be better. All right, so the market is gonna show y'all one thing. It's only one thing that you really should just kind of speculate on, and that's the price. The price is the final vote between buyers and sellers. That's what we looking at when we trading, right? We looking at the price. Okay. Now it's a funny thing. My relationship with this word price. Uh, this is my actual last name. I'm not afraid to let y'all know that that's my real last name. Okay, Price is my last name. So it's funny how I've had a relationship with the word price and what it is and what it means. But nonetheless, price is the final vote between the buyers and the sellers when it comes to trading. Every candle that you see on the chart represents a battle between people who want to buy and people who want to sell. Okay. So sometimes the buyers win, sometimes the sellers win. But occasionally, right, every now and then, something happens that changes everything, and that's what we finna talk about. Every now and then, you got one side that starts winning consistently. Okay, this is called a bull run or a bear run, bullish cycle or a bearish cycle. Okay, You gonna every now and then it's amazing. It's gonna be one side that's gonna start winning consistently. I'm here to prepare you for these situations tonight. It will never be a moment again, as long as you got the power of execution, that you will miss out on an opportunity like this. As long as you know how to take them, it's on you to execute. All right, excuse me. So when this happens, something called a trend is created, ladies and gentlemen. A trend is created. A trend is simply the price moving mostly in one direction over a period of time. Do y'all understand? Put a W in the chat if you understand that. I know y'all like, bro, we already know what a trend is. Okay, well listen, I'm here to teach the people who don't necessarily know. So it's okay if you know what I'm saying? But I'm glad you're here. Still, you can help me out with engaging, you can share the live out. But yeah, for those that don't know what a trend is, it's basically when one side starts winning consistently. And when that happens, a trend is created, right? So it's not going to be perfect. It won't be in a straight line. The price will not go up in a straight line like an elevator. Sometimes it does, but it won't do that, okay? I want you to pay attention to this part because it won't be in a straight line, but it will be with clear direction. You will be able to spot the trend and it'll be moving in a clear direction, okay? So learning to see this direction, Ironworth traders, is the foundation of trading. Before you learn any indicators, because I'm gonna go over indicators again like I did last year. I'm gonna teach you every indicator they got on there if you want to learn them. But before you learn the indicators, before you start trying to trade stock options or futures or forex, right, whatever the case may be, before anybody try to teach you a strategy, you must understand market structure. You must. This is a must. So who can tell me the three market conditions? It's a trick question. Who can tell me the three market conditions? The three market phases. How about that? That's right. Future fame, uptrend, downtrend, consolidation, aka sideways trend or the range. Okay, consolidation is when the price is moving in a sideways trend. But let me not get ahead of myself. I just want you to know that it's only really three market conditions. The price is either moving up, moving down, or moving sideways. This is simple. Okay, there is no fourth option, right? Let's break those down. Let's break those down. What up, Chase? So, a uptrend is when the price is moving higher over time, ladies and gentlemen. When you see this happening, the price is making higher highs and higher lows. Make me see. I wonder if y'all can see my cursor. I wonder. Oh, I wonder if she knows. No, I don't think so. It's all right though. So look at the uptrend. You notice that, look at the arrows pointing at the top of, let's call them mountains, right? Since they look like mountaintops. What's up, Ty? What's up, y'all? How y'all doing? Y'all having a good weekend? Did y'all have a good week overall? Did y'all trade? Did y'all invest? Did you eat a good dinner? Or are you fasting? What's up? What y'all got going on? It's bulls, beers, and pigs, says Anthony Gigi. I don't know what you talking about, brother. I had some steaks. Okay, that's what's up, Chase. You eating good, man. Eating good over there, Chase. How y'all week though? How y'all week go? Y'all making good money in the market? Y'all investing? Building these solid financial foundations? Cool weekend. That's what's up. I was gonna wait on y'all to say something. You know what I'm saying? I was waiting on the response. But check it out. A uptrend, okay? So a uptrend is when the price is moving higher over time. But a lot of beginners, they often misunderstand what this looks like. That's why I'm here to change that for you. They think that the price should go straight up, and the markets don't really move like that. All right. So instead it moves in waves. Look at the top of the mountains on the uptrend. Every time it got to the top of the mountain, and it came to the bottom of the bottom of the mountain was lower than before. And then when it went back up to the top of the next mountain was higher than the last mountain. So it created a higher high. Let's not talk about fucking mountains. We're not in kindergarten. I just use that as an example to get you to understand what I'm talking about, okay? We're going to call them higher highs and we're going to call those higher lows. But if they went lower than they did the previous moment, then they will be called lower lows. If it went lower than it did when it went up, it will be called a lower high. I'm going to show you what a lower high and a lower low look like on a chart. I just want to, it's easy to see with this representation, right? The price pushes higher, then it pulls back, then it pushes higher again. Those waves create something very important, okay? Higher highs and higher lows. A higher high does not mean you smoked another blunt. I'm just playing. I'm just playing. All right, I'm just playing. A higher high means price broke above the previous peak, ladies and gentlemen. A higher low means the pullback stopped above the previous pullback. I hope TikTok don't trip over that joke. It was corny. I know TikTok, but chill. Okay, TikTok be on my top about any and everything. Those who know, y'all know. Anyway, so look, when you see a pattern like a higher high and a higher low repeating itself, who is in control? Can anybody in the chat tell me who is in control whenever you see higher highs and higher lows? Ty said me. No, for real, Ty. The buyers. That's right, Gwen. That's right, Vance. Correct. So the buyers, when you see that happening, that is an uptrend. Now let's talk about the downtrend. A downtrend is the opposite behavior, ladies and gentlemen. The price is going to rally upward for a moment. You're going to see the price go up for a moment. Then you'll get to a point where you will see the seller step in. And then the rally fails. Okay? You thought it was going up. The seller step in. Killed all that noise. So that's going to create something called a lower high. Okay? We're looking at the downtrend. Then the price drops below the previous low. Okay? And the next time it dropped, it went lower than it did before. That's creating a lower low. Lower highs and lower lows tell you who is in control, ladies and gentlemen. How do you spot the change in trend? We about to get to that, Gwen. I'm actually about to teach you how to draw the trend lines and all of that. I'm going to teach you what every tool is tonight, Gwen. If you stay as long as you can stay. I know it's 12, it's midnight. This the midnight show, you know. I like the graveyard shift because of how active y'all are. Y'all engage. Watch this, Gwen. Everybody put a W in the chat if you love to get money and you love to learn how to get money. Right? How to make money make itself. The people in the daytime, they do not be dropping W's. You see these people, how active they is. Some of them at work, some of them in their bed, some of them in the kitchen getting a glass of water and shit, or, you know, eating something. Some of them studying, some of them in school, some of them at work still. Like I said already, I said work twice, but yeah, that's just how much they work. Some of them, I ain't gonna say what the other one's doing. Y'all know what y'all doing. Get off. Some of them on the toilet and shit. Get your stanky booty ass out the bathroom. I'm just joking, y'all. I'm just playing. Let me get back on topic. So look, a downtrend is when you got lower highs and lower lows. All right, that's when you know that the sellers are in control. Then you got to deal with a sideways market. This is called consolidation. All right, you're going to hear that word consolidation a lot when you trading. For those that's new to trading or investing, when you looking at a price of a stock or a commodity or whatever, maybe you trading futures or forex, or maybe a currency pair, whatever you trading, and you looking at a chart, and the price is going up and down, but it's really going sideways. It's not going up or down for real, but it's going up and down sideways. If that makes sense, that's what a consolidation is, right? This is the one that frustrates traders the most. Hey, by a show of hands, have y'all ever got chopped up in consolidation before? You ain't a real trader until you experience this part of trading. Until you, I feel like you really ain't. You know what I'm saying? It's almost like a hazing. You got to go through it. So This is when the price moves up and down inside of a range. Oh, to a tie, be careful. I'm glad you hear it before it happens to you, because that way you get to know how to react to it. See, it's never going to create consistent higher highs, and it never create consistent lower lows. It simply bounces between support and resistance. That's what you're dealing with in a sideways trend or consolidation. The market is basically in that moment undecided. It's undecisive, you know, uncertain. Yes, uncertain. So much uncertainty. We don't know. And then that creates fear. But Ironworth traders, okay, that's you and I, we recognize this quick. All right. So we simply wait it out. Because trading inside of a chop is where a lot of beginners lose money. You can scalp it once you become experienced. So before you scalpers try to chew me up and scalp me and shit. I'm explaining to a lot of people who they're come on, like they don't need to be doing that right now. What are you doing, pal? You can start them out like that if y'all want to. I don't want to start people out scalping and shit. Some of them can't hold their breath for 30 seconds, but guess what? They gonna be holding their breath for 30 seconds, scalping this shit, and especially without knowing how to manage risk. All right, but anyways, let's continue. I'm explaining to y'all why trends exist. Okay, so this is important. Trends happen. They are not random. They are not random. We dealing with institutions. We dealing with banks. It's a lot of people with a lot of money. A lot of big hedge funds, mutual funds, pension funds. You're dealing with a lot of organizations that control, when I say a shit ton of money, I mean like enormous amounts of money, right? So they can't buy millions of shares instantly. They cannot buy millions of shares instantly. If they tried to, who could tell me what would happen? Well, just imagine what would happen. It just will push the price too fast, y'all. So what they do is they accumulate positions in a slow manner. They smurf their way in. They accumulate positions slowly. JB, what up? But there actually hasn't been a trend lately. It's just been up and down and up and down and up and down. That's right. That's called a sideways range. And whenever a sideways range happens, JB, we waiting on a breakout. Right? But truth is, it could trade inside a consolidation for a long time. It don't have to break out. There's no limit to how long it can go sideways, right? You just looking for it to break above or below key levels. And those two key levels would be the range that it's trading within, right? And I'm gonna show you something. I'm just explaining something right now about how why trends exist, right? Because of these big companies and how they accumulate these small positions, or I'm gonna say they accumulate positions slowly, day after day, week after week. We watch this shit. Now we pay attention to the order flow. We watching unusual option activity. We watch it. We pay attention to large orders. But that steady accumulation is going to create a trend. That's where these trends come from. So we do not create the trend, ladies and gentlemen. As retail traders, you and I, we do not create the trend. The institutions do. But if you're a smart trader, then you can simply ride the wave. That's it. So don't fight the fuck. I'm sorry for cursing. I was finna say don't fight the fucking trend. I got it halfway out. I might as well say it. Don't fight the fucking trend, okay? A lot of beginners fight the trend, man. Don't fight the trend. The trend is your friend. See, they try to pick the top. They try to pick the bottom. They believe that the market has simply gone too far, but they don't know. Like, the market can go much further than what you think. It can keep going sideways. JB, you've been in the market with me about a year, right? You've learned a lot since you've been trading stock options in a year. Yeah. Do you know who got a crystal ball that can tell us when it's gonna stop going up or when it's gonna stop going down or when it's gonna get out of consolidation? Nobody has a. No, I do know. Nancy has got one. Nancy Pelosi got one. Other than her, a couple other people. You know what I'm saying? But yeah, y'all get the gist of what I'm saying. Yeah, we made money. Hey, listen, put a W in the chat if you made money off Nancy Pelosi. Hey, is it Pelosi or Pelosi? Whatever. Either way it go, I heard Trump point her out and a few other people, and it was like he shutting that shit down. See, it's insider trading. It ain't cool. You know what I'm saying? If they not gonna cut us in too. It ain't insider trading if they go ahead and cut us in too. I'm just playing TikTok. It's just a joke. This is entertainment purposes and educational purposes only TikTok. All right, anyways. So remember that the market can go much further than what a lot of people expect. When traders fight the trend, they basically standing in front of a moving train. Why would you do that? We want to do the opposite. We want to hitchhike. We want to be a hobo. I'm joking. I'm joking. We don't want to be a hobo, but I'm metaphorically speaking, basically saying we want to go with the train. The train, it's going to get me where I'm trying to go. Right? I mean, a lot of y'all trade like hobos and shit. I'm just playing, man. Don't. You gotta have tough skin over here. When I say trade like a hobo, I'm saying that because you trying to come up on $2,000 off $2, off $20 and shit. Like, you know what I mean? The bigger the risk, the bigger the reward. My uncles, them, big cousins, them, they used to say, "Scared money don't make no money," and it's true. It's true. But you have to manage your risk. You have to have a predefined risk. You got to say, even no matter what you do, I don't care if you go into the casino, right? Even if you're a gambler, you need to control your risk. So even for all you people that trade like gamblers, let me calm down. I think I need to slow down on these little corny ass jokes and shit, right? It's Indiana is getting to me. So I'm gonna get back on topic. The trend is your friend. That's all I'm trying to say. It just means that trade in the direction that the price is already moving in, y'all. Right? Trade in the direction that the price is already moving in. Okay? This is what started me on swing trading. Now, how somebody asked me earlier, Coach, how do we identify a trend correctly? Okay, so this is where I'm gonna slow it down so I can do my best to train your eye. Okay, because the skill of spotting trends is it's like learning a language. It's like learning a language. All right, so at first everything looked confusing. Hey, if y'all new here, hit the follow button. I got 67 people. I need to have at least 67 more followers. Y'all see my goal? Where my goal at? My goal up here. This is my goal. I need to get to 10,000 people served, right? We're not far from 10,000 people served. We had 8,352 people served. I done taught at least 8,353 people, right? And this is my way of measuring. I know I've taught maybe more than that, but yeah, this is my way of measuring. If you hit the follow button, you let me know. So thank everybody that hit it. I appreciate y'all so much, so much. Everybody else, if you don't want to follow, at least hit the tap the screen for me a couple times. It does not power a small village in Africa. What it does is when you tap the screen, it pushes my video out to a larger audience on the For You page. It let TikTok know, okay, he doing something over there. Thank you, Lynn. I appreciate you for even letting me know you hit that. The engagement matters too. So do y'all got any questions before I explain how to identify a trend correctly? Any questions? Any objections? I object, face eye. Any objections? None? Going once? So to the man with the braids in his ear. Nobody? All right, bet. So look, this is where I want y'all to learn the pattern. Because once your brain learn the pattern, you're gonna see it instantly. All right. But at first, everything will look confusing. It will. So we're gonna look at a chart. We're gonna ignore the indicators. We're not gonna look at we ain't care about the news. You're gonna look at a chart and you're gonna ask yourself one simple question. Lime, I trade stock options mostly, even though futures is open damn near 24 hours a day, 23 hours a day, 5 days a week, right? I guess you could say 6. But yeah, I love futures, but I trade stock options mostly. I will get to a point where I'll probably be future heavy, right? Let's get the 7. Let's get the 7 figures. All right. So, anyways, ask yourself a question when you're looking at a chart, y'all. Is the price making higher highs and higher lows? Is the price making higher highs and higher lows? If the answer is yes, then that's an uptrend. If it's making lower highs and lower lows, that's a downtrend. If neither is happening, then the market is ranging. Okay, so the simple observation is the foundation of technical analysis. Congratulations. Y'all just learned technical. Okay. Now, we're going to talk about how to draw trend lines, okay? We're going to talk about doing, I know a lot of y'all trend lines be looking crazy. Yes, Epiphany Love Official, it does matter. I just did a whole segue on top-down analysis, okay? And I'll go over it again in a second. But I want to talk about how trend lines are basically just visual guides. That's what you use in trend lines for. Thank you for the heart me. Todd, thank you for the heart me. Everybody go follow Epiphany. These are high quality people, okay? Epiphany, Ty, Marina, Joey, they all hit the heart me at the top of the phone or whatever. I don't know where it's at, but yeah, they hit that heart me up there, and it's helping me out with TikTok. Believe it or not, I don't care about it, but I do because it's helping me progress. So I gotta ask y'all every fucking 30 seconds to follow me or tap the screen, or you know what I'm saying? I'm getting used to being a streamer like these. What do they call them? These, I'm just gonna say the new generation. Right? I'm an old soul. I'm only 34, but you know, I really can't get jiggy with this shit. Right? But I do think it's amazing that I can help 75 people at one time. I think that's amazing. Without being in front of y'all for real. It's helping him let others know he's solid. Thank you, Lynn. All right, so yeah, let me get back to top. Let me get back on topic. I want y'all to realize that trend lines is gonna help your brain see structure faster. In an uptrend, you want to draw a line connecting the higher lows, okay? Because that line is going to show you where the buyers keep stepping in at. Remember, in an uptrend, the price is doing what? It's going up. So if the price is going up and I want to participate in this uptrend, why in the fuck would I buy at the high? For me to be mad when it dropped to the low, for you to sell when it get to the low, the higher low, before it go up to another higher high, for you to feel crazy. I hope I ain't say nothing crazy, because I be saying crazy shit, and TikTok let me know real quick by suspending me, and I won't be able to go live, and I won't be able to teach y'all, so I got to be careful what I say. Dirty man, calm down with these words and shit, man. Stop cursing so much. I apologize, y'all. But do y'all get what I'm saying? Do y'all get the gist? W's in the chat if you understand that part. If not, put an L in the chat. The L don't mean a loss. It just means I need to go over this lesson. You need to learn the lesson again. I'll go over it again if you don't understand what I'm saying. But when you making trend lines, when the uptrend, you want to draw the line connecting the higher lows. They call me Mimi when you drawing trend lines, and I'm gonna show you real quick. Let me see if I can let me pull this up. Okay, we're gonna do it like this. Let's see. Y'all still should be able to see my screen. Let me see. Oh, the damn that picture in the way. Okay, hold on. All right, here we go. We're gonna figure it out. I'm getting used to this shit. All right, here we go. So where was I at? In an uptrend. This is a good example. SPY's in an uptrend, right? This is an uptrend. And this is on the monthly chart. I guess I can go down to a weekly just to kind of get a better. No, I think the monthly was cool. Yeah, we're going to stay on the monthly. All right, so look. I'll go up here and get a trend line. And what I want to pay attention to is the bottom, the higher lows. The price is making higher lows. Let's just look at this part right here, just to make it simple. Price is making higher lows in this uptrend. So I want to get in when the price comes down to this trend line so that I can take advantage of it, right? And be a part of the movement up. It's the same thing in this picture that I'm showing you here. Let's see, where's it at? Yeah, right here. Same thing. Look at that gap in the weekly. Yeah, that was yeah, Epiphany. I'm gonna go back. I'm gonna go back. I'm gonna do a top down analysis, but I just want to show you how this line, this the bottom trend line is going to show you where the buyers consistently step in. So in a downtrend, you draw a line connecting the lower highs. When you in a downtrend, you connect the lower highs because you this is going to show you where the sellers keep on taking control at. Okay, so trend lines are very powerful whenever the price is respecting it over and over again. Okay, when you see that happening, it is a blessing, a money printer. Okay, if you do it right, it's a money printer. If you do it wrong, it is a damn vacuum towards money. It's gonna take your money. Really, you giving your money to it because you should have a predefined stop loss like I taught you. You know, or if I haven't taught you, I'll teach you now. Lose a little, okay? Lose very little. Every time you take a loss, lose a little. That's risk management taught to you in 10 seconds. All right. Now, trend lines become powerful when price respects them. One touch means nothing. I don't need it. Just because it hit a trend line one time, y'all, that don't mean shit. Two touches, that got my attention. Three touches, okay? This is some real structure here. I'm basically saying if the price, like whenever the price hit this top, hit the ceiling, hit the floor, hit the ceiling, hit the floor, where in the fuck is it about to go next? Of course, you should say the ceiling. If not, you was that kid in class when the teacher said, "Okay, kids, 3, 6, 9, what comes next?" You said 10. Get your ass out of my class. I'm just playing, y'all. I'm just playing. I'm just joking. We don't do that type of shaming. I'm gonna help that kid out, and I'm gonna let him know nobody. We count and learn. Look at the pattern. Look at the pattern. Okay, trading is pattern recognition. I do not want to see you. If this was elementary or preschool, I don't want to see you trying to fit a cylinder. Let's say a cylinder inside of a square hole. A square hole. I know this shit sounded crazy. A cylinder block in a square hole. You was trying to put the triangle in the rectangle hole, face it. And I'm just playing, y'all. I'm just joking. They corny as hell, but I'm serious though. I'm serious as far as spotting the pattern and paying attention to it. It means something. All right. So when you see that, when you see it touching the trend line at least 2 to 3 times, that's called the rule of 3. Right. So the trends usually come to an end. That happens. It don't stay in the trend forever. Right. But they do not end randomly. They don't end randomly. The trend does not end randomly. They end whenever the structure breaks. Okay. So that's how you spot the reversal. When if it hit the ceiling, hit the floor, hit the ceiling, hit the floor, hit the ceiling, hit the floor, but this time it hit the floor, it did not return to the ceiling, ladies and gentlemen. It broke below the floor and it went down into the basement. Okay. It broke the floor. It did not return to the floor. It did not return to the pattern. It stayed below the bottom trend line. Do y'all understand? Put a W in the chat or hit the follow button if you understand. Maybe both. Maybe both of them. BOFFUM. Maybe both of them. All right, do me a favor. Hit that follow button if you ain't already. Mo D, what it do? Okay, so I'm gonna continue. All right, so look, if again if the price is moving in a clear uptrend, the moment it is not moving in that range no more, then you dealing with, you know, a breakout. The trend is over with. The structure just broke. So in the uptrend, you got higher lows, right? If the price suddenly break below a previous higher low, like right here, this the previous higher low right here. The price was low, it came up, came all the way down. Y'all can't see my mouse, and I'm sorry. So look at the middle. Look at the higher low in the middle. It's shown by the green arrow. Look at the green arrow pointing at the blue circle in the middle. Okay, let's use your brain. The green arrow pointing at the blue circle in the middle. If the price it suddenly breaks below that level because that's the previous low, something has changed. The buyers are losing control. Okay, that moment is called a structure break. Do y'all understand? I'm gonna say it again because I think you not being able to see my mouse is a problem. Uh, so let me see if I can put this into words. Do you see where it says in the red rectangle support to resistance? Okay, on the left side of that red rectangle in the middle of the screen, there's a blue circle. And under that blue circle, there's a green arrow pointing at that blue circle to show you that this is the higher low that I'm talking about. The price went all the way back up to the ceiling from that floor, and it came back down, but it didn't go back as low to that level right away. Then it finally came down to that level where it was at before, okay? And went further down all the way to the bottom where it says target. Okay, so what I'm explaining to you is if the price suddenly breaks below a previous higher low, something has changed. The buyers are not in control no more. That's a structure break, and that leads to reversals, or maybe the market finna go sideways, like SPY doing right now. But if you can recognize this moment, it'll protect you from holding a position too long. How many of y'all held a position for too long and you didn't understand? You don't know why you held it for too long. You know where you should have got out at, but you get the gist of what I'm saying, man. Sometimes you need to realize when to get out based on the price action, based on the price structure, market structure. Support and resistance. Support and resistance, for those that don't know, are horizontal levels where the price repeatedly, the price is hitting this spot over and over and over and over and over again, okay? Sometimes it just happened a couple times, but yeah, either way it go. I'm just getting you to understand support and resistance is where the price keep reacting at this level. Let's look at SPY real quick, and I'm gonna go to a 4-hour time frame so I can show you what I mean by support and resistance. This is good right here. I'm gonna show you how the price keep reacting in two different spots and why you should pay attention to those two spots that the price is reacting in. But first, let me get this off the screen. All right, so the price keeps reacting here. And then the price keeps reacting. Let's say I want to use a different, let's use this. You know what? That's the wrong tool. I don't want that. I don't want that. That's the wrong tool. I'll use parallel. There we go. So right here, this is how I want to show you, and I'll make them. I think those colors are crazy too. People can't see that shit. Let's make them wider so we can see. There we go. Now the price keeps every time the price got down here at these. Who can tell me what type of lows is the price making right now? Like, I mean, just take a look. Somebody says, got to know you try and exit. I'm always holding too long. What time frame is the best time frame? You want to do top down analysis. You don't want to be married to one time frame. Yes, Sam Gotti. Yes, y'all correct. It's making lower lows. So what does that tell you about the S&P 500 right now? You don't gotta ask no fake ass TikTok guru or no fake ass YouTube guru or no real YouTube guru who don't got time to answer your simple ass question. You can answer it yourself once you learn market structure. Use ChatGPT, use YouTube. I just told y'all yesterday, exhaust the free measures. There's so much free shit on the internet. If you don't take advantage of the free shit, you shouldn't be trying to get a mentor. You wasting the mentor time. Learn the free shit first so you can really get good information from them. Don't let them teach you the shit that you could have went and learned on your own, right? Right? I'm just good at teaching beginner level, so I don't mind doing this. But I'll teach you how to do a cover call and a cash secure put at the same time, and a strangle and a wheel strategy at the same time in the same breath. It can teach you about treasury bonds and treasury notes and etc. Uh, Somebody says I'm gonna crash all markets if they don't stop the war. So GG's. Anyways, back to the top part, right up here. The price keeps coming up here in the red rectangle. Every time the price gets up here, the sellers step in and pushes it back down. Sellers got in here, pushed it back down. Sellers got in here, pushed it back down. Every time it got up there in that red rectangle, it couldn't break above it, ladies and gentlemen. Slim Gotti, thank you for the goats. Thank you for the goats. Can't stress it enough, man. Appreciate the high energy. I love high energy people, bro. They come here, they show love. I ain't got number love for you, brother. Brother. All right, so look, y'all. This how we gonna do it. We gonna learn and pay attention to these levels because this is literally when trend lines intersect with support or resistance, powerful trade opportunities appear, and you can take advantage of those powerful trading opportunities. Okay, let's see. Let's pull this back up. I just want y'all to get this. Let's get this understood. All right, you got multiple forms of structure aligning whenever you see trend lines intersecting with each other. So it's something called confluence. I want y'all to learn. You spell it CONFLUENCE. 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 Okay. Slim Gotti said, "You blessing the people, much respect, no doubt." Y'all have a good night, folks. Take care. Thank you, Gary, for pulling up. You have a good night as well. So confluence simply means you seeing multiple signals pointing towards the same idea. Now you know what confluence is. Congratulations. Okay. So that's whenever you got multiple signals pointing towards the same idea. Now, take everything I just taught y'all. The first thing you want to do is pretty much look at the market condition. Let's see. I might as well just leave it up. Yeah, I'm gonna leave it up. And I'm gonna take all this off the chart so I don't confuse y'all. I'm finna go start from ground zero. We're gonna start from ground zero. Now, step one, I wanna identify the trend. I'm gonna start from the monthly. All right, it's clearly in an uptrend. All right, we're clearly in an uptrend. It's crazy that it even came far down like that to even. I mean, it's respecting a trend. Somebody says, "How you doing today, sir? Hope all is well with you." Thank you. All is well. Never lacking came through with the dub. Appreciate you for dropping the W's in the chat. So look, step one, we want to identify the market condition. We want to know if it's in an uptrend, a downtrend, or is it going sideways. So it's clearly in an uptrend, but I don't know about right now. Like where we at right now is looking like the top of the hill every time it came down. Right? We in the sideways market. We know the market condition right now. We gonna draw the trend line, but we started on the monthly so we can get a bigger picture. But we gonna come down to a weekly time frame so I can see. I want to get a better picture of what's going on. Right? So now I got my lower highs marked. This is the lower highs on a weekly. I want to even come down to a daily time frame and look at it from a daily time frame. I'll mark it on here too. Let's mark it on the daily time frame as well. I'll use an extended line so it can go all the way across. So the price is continuing to make higher lows, right? So we want to wait for the pullback towards these trend lines, and that's where it's at right now. It has pulled back to the trend line. What do we do right here? Can anybody in the chat tell me, what do you do when the price returns to the trend line? Because this is step 4. Use a brighter color trend line. Okay. Joe Butler says buy and DJ says buy, but that's not what I want y'all to do, Joe Butler. It's not what I want you to do, DJ. It's not what you want to do. Okay? I'm going to tell you what to do. I want to see if anybody knows, who knows? What happens when after you wait for a pullback towards the trend line, which we got right here. The price came to this line and it failed to break below it here. It failed to break below it here. And then we haven't broke below it yet here. Somebody says, wait for a breakout to see what direction it's going in. Somebody else says hold. Somebody else says wait. Somebody else says wait. So step 4 is watch for signs that the trend may continue, which is wait. We want to wait and see if this is going to continue, if it's going to act. You want to wait. Wow, you don't want to jump the gun, okay? This shit ain't about making predictions. No, this is not Bitcoin, but you can take this information and trade just about anything as long as you know how to read a candlestick chart. That's what I'm teaching you, though. I want to make sure you know what you're looking at when you see market structure. So, examples of what could be a sign that the trend may continue will include, we want to see some strong candles. Okay, this is not really a strong candle, at least on the daily time frame. But I want to see true confirmation, like Lime said. Everybody's saying the right thing. Step 5 is I want to enter with the proper risk management. So again, step 1, look at the market condition. Is this in an uptrend, downtrend, or is it going sideways? Then I want to draw my trend line. Then I want to wait for a pullback towards that trend line. Then I want to watch for signs that the trend is going to actually keep going in whatever trend it's in, okay? Or if it's not. Now, we're going to get in with the proper risk management. This shit, when you trade in the trend, it's not about predicting the future. All right, long as you say, all right, if it goes here, I was wrong. Okay, I'm getting out the trade if it goes here. I was wrong. If I lose 1%, I'm just going to get out. You got to align yourself with the dominant direction of the price, though, right? So over time, sometimes people get wicked out. Like, you will see some shit happen and a wick will kick you out of trade. A wick will kick you out of trade. Because this right here is 655. If the price come down to, what's this, 651, oh yeah, you getting out. Oh yeah, you would have got out. You would have got out. And just for it to go to a higher high the very next day, the very next week, the very next month, okay? So sometimes a wick can kick you the fuck out of trade. But that's not the point. The point is you reposition. If you get kicked out of a trade, you simply reposition. Now, but you still need to have a daily loss limit to the point where, okay, I'm just wrong about today. Let me chill the fuck out, because you got to protect the bag. Ladies and gentlemen, you must secure the security. You need to secure the security, right? Over time, the probabilities are going to work in your favor because you're taking small losses. I just can't stress this enough that you got people out here showing you that they winning all the time. They won 9 trades this week, 9 trades next week, but they not showing you that every week they taking one loss. And you think that it's miraculous because they taking one loss, but that one loss that they taking is wiping out the 9 wins because they don't have no risk management. They lose so much on one trade, it wipe out all the wins. Now flip that and take very small losses. You can have 9 losses every day and one win every day. And that one win will wipe out the 9 losses. This can happen. This is not probability. That's not how probability works. It is possible that you could lose a fucking 100 trades in a row. Okay, you could win 100 in a row, but it usually don't go like win, 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 win. Fuck everything else. Win, 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 win. Okay, it don't work like that. It's usually loss, 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 win, win that wiped out all the losses, right? That's how it's supposed to be. Not lose here 40% and then I win here 13% and then I lose here like 75%. Do y'all understand what I'm saying? Drop a W in the chat if y'all get what I'm saying. Zoom in. Okay, I will in a second. I'll go ahead and go down to a 4-hour time frame. All right, I might have to zoom out now. All right, so let me see something. Here we go. Big dubs in the chat. We got winners in the chat. All right, so now I'm going to pay attention to. Let me turn this off too, because what you see these lines on the chart is helpful because it helps me see the very dark area. The dark shaded area is the trading day. So that's from 9:30 in the morning to about 4 in the afternoon. But then in these gray shaded areas, this is the overnight. Okay, so you don't have to be confused about which part was the overnight session. As a swing trader, I care about that shit, so I need to be able to differentiate the two. But I'll go here to, I'll take them off because I don't need them right now. I just want y'all to see the price action. I just want you to see the price action. All right, so obviously, what's this? January, this is January the 28th, right here. Right here is January the 28th. So from here, the price became a level of, this became a heavy level of resistance. Let's draw a trend line right there. Let's put a line there, a horizontal line at the opening of that red candlestick. This is resistance. This is the ceiling. Okay. Now the price got here in January, came down, and created this level of support. I'm gonna mark that as well. Now trend lines don't have to be precise on the but it's more so of a range than it is a dollar amount. Okay, so don't be caught up on it being perfect. There we go. All right, so notice that the price was here at this level. Do y'all can see my mouse? Let me see. Let me look at my phone. Yes. So the price was here at this level of support. Remember, the support is the floor. The price worked its way up to resistance, to the ceiling. Okay, so right here it was at the floor on January the 20th. By the time January the 28th came, right, let's just say a week later, SPY went from 675 to 697 within a week. Are y'all paying attention? Because this is where the champions are made. When you can learn price action. And now you know that SPY can do a move like that. SPY can have a $20 move in a week. Okay? It can do more than that. I've seen it do more than that. But anyways, I've seen it do that in a day. Look what happened here. We on a daily time frame, y'all. So each candlestick represents 1 day of time. All right. If you look at the bottom of this chart, this is it. These are dates. Okay. And the date pops up when I run the cursor over any of these candlesticks so I can see what day it is. I can see that on this is a very long candlestick. What day is this? It was February the 12th. And I can look up here at the top left at these numbers, and I can see the opening, the high, and the low and the close, but I could also see that just by simply looking at this candlestick, right? Because red candlesticks open at the top and they close at the bottom. So if I want to know where was the price of SPY this day, I'm looking at the top of this candlestick, because I know that it went down from here because it's a red candlestick, and red candlesticks are telling you that the price went down. Green candlesticks are telling you that the price went up. Okay, so if it went up, it wouldn't go up from the top, silly. It went up from the bottom. If you jump on top of a building, don't you jump from the ground up? And when you jump off a building, hopefully you're not doing that. Don't you do it from the top down? So you read it from the top down when it's going down, right? So look, right here at the top of this red candlestick, you look all the way over to the far right. You come over here to the far right and you can see what the price was, $6.94. So we know that the price opened up at $6.94 that day. And by the end of the day, it went all the way down to $6.83 in one day. So it did that in one day. That was in one day. I know that because I'm looking at the time frame I'm in too. That was actually in 1 hour. I'm on a 4-hour time frame and didn't even realize it. This is a 1-day chart. Yeah, I didn't even realize it. So it's even worse because the candlestick's bigger. That's what happens when you zoom out. But I'm gonna go back to the 4-hour to show y'all what I was getting at, so we don't lose track. Let's see. Let me make this back small. I don't want to lose you because we're getting somewhere. We're making progress. I can feel it. Feel it in the air. Looking at. All right. So look, right here, the price was here. It made its way up. Boom, came up here within a week. Made its way back down. It literally, it started here and it came back here again. Okay, on the 20th, but it didn't break below this white dotted line. That is called respect. It respected this level of support. It did not break below it. The buyers stepped in again like they did here and pushed the price up to $6.97. But the sellers stepped in and pushed the price back down. The buyers stepped in and pushed the price back up. We are now in a tug-of-war battle between the buyers and the sellers. We are now stuck in a range until proven otherwise, which is what you see right here happening. Okay? That's what you see right there happening. Anybody confused? Anybody not confused, right? Anybody learning? Y'all know I need to see the winners. I gotta know. Anybody picking up on what I'm putting down? Okay, that's right. We having a successful class then. Only problem is only about 5 people responded, and it's about 80 of y'all in here. So wake y'all ass up. Wake up, Big Booty Bertha. What up? All the big booty traders in here, how y'all doing? A very clear explanation. All the flat booty traders, no discrimination. Throw the wham in a circle, even if it's little, make it jump like a hurdle, okay? All right, y'all, it's probably getting a little late when I start talking like that. Let me get back on topic. So look, yeah, again, the price respect the hell out of support for the past, let's say, 3 months. This was in December. The price been in this range since December. So we got 1, 2, 3, 4, about 5 times the price got to this level. I'm gonna say 4. Okay, about 4 times the price got to this level of support at 676 and pushed its way back up, except for now. So the price, this is a big gap. We might feel that fucking gap Monday. Hey, y'all heard it here. Y'all heard it here first, man. We might feel this gap Monday. Come back, stay tuned Monday. We're gonna come back and see if the price returns. Yeah, y'all see this big imbalance? There's no candlesticks. There's candlesticks missing. Whenever you see candlesticks missing, okay, like there is candlesticks missing right here, The price tends to make its way back up to fill those gaps, ladies and gentlemen. That's called a fair value gap. And that's what I see right here. I see the price returning back inside this gap. All right. So somebody said, is this swing trade? Yeah, you can take this information and trade any time frame with it. But either way it go, my final lesson is the trend trading is simple. But simple don't mean easy. Right? The biggest challenge is not learning these charts. I tell y'all that all the time, you know. You gotta control your emotions. What's gonna make you a profitable trader is you analyzing the way you think before you enter a trade. Yeah, get rid of all that impatience. Work on your impatience. Work on your fear with your scary ass. Work on your greed with your greedy ass. You're getting caught with your hand in the cookie jar. See, these emotions cause us to chase moves and ignore structure. That's why we gotta, manage them. You can't really get rid of them, but you gotta manage them. They are there for a reason. Now, the traders who succeed are the ones who learn discipline. Coach Price always telling y'all to take a 1% loss. It requires discipline on your behalf to do that. It requires discipline on your behalf to take a small loss every time. P said, and don't come in wanting to get a meal in a day. Your ass better come in trying to make sure you don't lose your money in a day. You understand me? I will survive. Oh, as long as I know how to lose, I know I will survive. Bitch, I ain't losing 5%. I ain't losing 10%. I'm just playing, y'all. I'm not finna make a cover on I will survive, but I'm dead ass serious though. I can't stress it enough. I really can't. It matters. Like, I don't want to lose. Why you want to lose that much anyways? Why do you want to lose more? Somebody says, whoa, 1%, that's a little bit. What the hell? You want to lose more? You want to lose more than that? You know how much? 1% could be $1,000, dude. Depending on how much your account is. Somebody says never give your money back to the market at all. Don't give it back to them. Don't give it to them initially. Don't be a donor to the market. Just don't. If you're going to do that, you might as well invest. B Luxy, thank you for the heart. Miss Crystal, thank you for the ghost. Hey, everybody that sent a gift tonight or a heart me or hit the follow button or tap the screen, I love you. I love you. Hey, I love you. I was finna do that Jim Carrey. You love me. You really love me. Looking at. But yeah, take your profits. Why you want to leave money on the table for? Somebody says, and can you explain fair value gap? What to look for? Empty spaces. Big empty spaces. Missing candlesticks. You want to look for missing candlesticks. Look at this. This is a missing candles. Missing candlesticks create fair value gaps that end up getting filled later on down the line. So you don't know when it'll get filled, but you got an idea. So I know when that shit get to 667, I mean, I might got a good chance of it going from 667 to 679. It's actually a high probability trade at that point. Even from here, the price dropped. It was a big drop from 685 to 676, and one could even say 669. The people that bought calls here, hallelujah, 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 face ass, hallelujah, face ass. They made a lot of money. They made some good money that day. It went all the way up to 686. I'm sorry for screaming in y'all ear too. I'm telling y'all it's getting late, and the later it get, my intrusive thoughts start to take over. Play Thriller. You know what I'm saying? And then I ain't even, now I can't monetize the live. I had to cut the live off right here if I want to put it on YouTube. Cause they don't be going for copyright. They will take your shit down in a heartbeat. You try to put Michael Jackson in the background of your video. What platforms do you use? Webull, P. I love Webull because of the information that they got on here. You can learn most of this stuff if you don't mind reading. Yo, Unc, you got my reply? How old are you, Chase? He talking about some respect. How old are you? Talking about some unk. Let's find out. You might be older than me, calling me unk and shit. You probably older than me, Chase. You 23. Okay, well, I'm gonna teach you something. From now on, for the rest of your life, I want you to attract bands. I don't want you to chase bands no more. I want you to attract bands. Because when you chase something, it's running from you. Okay? You don't want to chase the money. You want to attract the money. It's gonna come to you. You can build systems like cash flow systems, cash accumulation. All right. You good. But I don't think I'm old enough to be your uncle. You know what I mean? I'm 34, you 23. I'm like big cuz, maybe big bruh, big cuz, you know what I'm saying? But y'all want somebody to be y'all uncle so damn bad, bruh. I'll be your uncle nephew. I'll be your uncle nephew. Anyways, back on topic. Back on topic. I want to show y'all how to use these trend lines. I want to show y'all how to use these trend lines. Like how to draw. I already did that. Really, these toolboxes up here. I already did that. I want to show y'all how to use all these tools, not just the trend line, horizontal line, vertical line, extended, ray. Y'all need to know what all of them for. Because I think y'all see people with these charts and they be like all these drawings on them and they confuse you. But I hope I just showed y'all how the shit could be helpful. You understand? Y'all don't think it'd be helpful to know all this? To be able to map it out like that? You able to map it out? Anybody still confused? That's right. Look at how many people said no. Man, that made me feel so good. All right. Cool. That's perfect. So we're going to go over some of these tools in here. Just texting my sister back, and she is dramatic. I don't care. Aaliyah, we can see. What did Aaliyah say? I don't know how to trade, so I just listen. They call me Mimi. It's all right. So I'm gonna give you an example. Something. Look, let me show you something. Let me teach you something real quick. Quick lesson, quick crash course. This is AMD too. This is a big ass gap on AMD. One day y'all gonna look up and wish y'all had bought AMD at this level. But anyways, let's go back. Let's go back 5 years in time. All right, let's go back 5 years in time. I'm gonna teach you something. It's gonna help you out tremendously. They call me Mimi. In the year, let's say, let's use 2000. I know some of y'all was very young in 2017. Some of y'all was even younger in 2015. But let's use 2015 as an example. 2016 is even better because that's 10 years ago. 10 years ago. 10 years ago, this stock was $1. It was $2 10 years ago. Okay. You could have bought AMD for $2 a share 10 years ago. Let's go back a little bit closer. Let's say 2022, you could have got it for $55, right? And not just one share, not two shares. You want to accumulate. That's $55 this week, next week, the week after that. I'll get one share a week if I have to, but I'm gonna get my shares up. So by the time it's $267, you know, I won't be caught up like the people. Now I'm gonna tell you something, Mimi. A lot of people lost a lot of money on the way from AMD going from $2 to $55 to $267 because they was worried about trading. Don't be caught up on trading, right? Focus on investing first because let me tell you something, Mimi. You can do something special. And I call it special because it's a win-win situation. Covered calls, cash secured puts. Both of them are win-win situations. Both of them require you to do something big, right? And what I mean by big, if I do a covered call, it's because I own 100 shares already of that stock. And I'm about to get paid off of somebody who want to trade. Somebody who want to buy a call, they about to buy the call from me. I'm about to sell them the call. I'm going to get paid the premium. I'm getting paid right out the gate. They paying right out the gate. So do you want to be on the side that's getting paid or do you want to be on the side that's paying? Can anybody tell me what side do y'all want to be on? The side that's getting paid or the side that's paying? Ooh, it makes sense now, don't it? Ooh, it makes sense now, don't it? I know. I'd rather be on the side to get paid too. So I like collecting the premium. I like collecting the premium. I'm gonna say it again. I like collecting the premium. You gotta buy 100 shares, and then you can sell covered calls and collect the premium. And the worst thing that can happen is I get to sell a stock that I was willing to sell anyways. So can somebody tell me what happens when you sell a stock? When you sell a stock that you bought, what happens? I ain't talking about whether you made money or lost money. When you sell a stock, do you get money? Do you get money in return when you sell a stock? Yes or no? Do you get money in return when you sell a stock? Okay. So when you're doing a covered call, you should only do covered calls on stocks that you were willing to sell. Do you understand? Do you understand? Do you understand what I'm telling you? Because if if I do a covered call and let's say I say, okay, I don't think that AMD is gonna go back up to $215 in the next 2 weeks. But for some reason you do. Okay. So you want to buy that 200 and let's say you want to buy that call. You want to buy a call, you think the price gonna go up there. I don't. If it does go there, the worst that can happen is I gotta sell. And I was willing to sell anyways. I was willing to sell anyways. Flip side of that is when I'm doing a cash secure put. I only want to do that on the stock that I was willing to buy 100 shares of. A cash secure put is me saying I don't think the AMD is going to come down to $76. But if it does, I'm willing to buy 100 shares of it. The worst case scenario is I get to buy my favorite stock for a cheap ass price. Worst case scenario is I collected the premium. No, the worst case is I got to buy my favorite stock, which is good. It's a win-win. So I'm getting paid the premium up front, just like the covered call. So when you buying a put and buying a call, you paying a premium. When you selling a call and selling a put, you getting paid the premium. But one, you gotta buy shares to be in that ball game, to be in that. That's why I said it's special. That's why I said it requires you to do something big because you gotta have enough money to buy 100 shares if you're gonna do a cash secure put. You gotta have enough money shares to do a covered call if you're gonna do it. So you need to start doing one and two things: building up your buying power and building up your portfolio. Ooh, I just killed him. Ooh, I ain't killed him. I gave him life. I gave him life. I really want to end it on that note. But I was supposed to go over these tools, so that's what I'm about to do. That's what I'm about to do. I could end it on that note though. That's a good spot to end that on. Anybody still confused and got any questions? Hit the follow button if you're new here. this is a future. This is the same thing as SPY, but it's futures. Can you walk us through the lines again? Yes, I can. OG, you still hoop 86. So I want to start with, let's start with up here. So up here we got the tools, right? Every time I run the mouse over, every time I run the mouse over anything up here, it's gonna tell me what it is. 1 second. Let me make sure I can still see the screen on my other device. If you turn your phone sideways, you can zoom in on it and have a better look. But yeah. All right, so up here, we got all these different tools that we can use. When I click this little arrow right here, I mean this pencil, it says drawings. This same thing, it's the screen is so small. I know, I'm sorry, Mimi. My apologies. You should be able to turn your phone to the side and zoom in some. But yeah, I got you. You know, if you want me to help you outside of this, I got you. So look, up here when I click this, because I know a lot of y'all not using Webull, but this same thing applies for TradingView, Thinkorswim. I don't care what you're trading on, they should have a toolbox. You go to the drawings, and I go here to this little small arrow that's right next to the whatever is already chosen. I may not want a horizontal line, so I'll come here to this arrow, and it gives me other options. So we'll start with the trend line. When y'all open up your toolbox and you use a trend line, this is an important tool, right? This is an important tool right here. Let's make it white. I know y'all can't see it. Now, the reason why a trend line is one of the most important tools in technical analysis is simply because it's a straight line connecting two or more swing points on a chart to show us the price direction, to show us the direction that the price is moving in. Okay? When the price is trending up, when the price is trending up, you connect the higher lows. I'm going to do it with the lows, but I did it with the highs. You know what? I'm trying to figure out what. I guess I'll just delete all drawings since it's want to act crazy while I'm live like that. Don't play with me, TikTok. Don't play with me. All right, so it's in the uptrend. Look, I'll take my trend line and I'll connect the lower highs. It was low right here. The price went up and it came back down to create a higher low, right? I don't know why I said lower highs. Yeah, so because it was making lower highs. But right here, we got a low. It went up here to create this high level. It came back down, but it didn't go as low as it was here. So this is called a higher low. And it did it all the way up here. It created 3 higher lows. 1, 2, 3. It created 3 higher lows. Yeah, 1, 2, 3. So I connected the higher lows to show the uptrend. I know that that's in the uptrend. And it was in the uptrend until it wasn't. I don't know why it's doing that. What's going on? Let me make it big screen. There we go. That's better. So the price broke below. The price broke below, way below. I mean, it dropped below it and it continued to go down. But if I just was to keep this trend line going, SPY ended up coming back to it. It ended up coming back to it. It ended up filling this big gap right here. But that's irrelevant. I'm just talking about trend lines right now. So that's irrelevant. So look, when the price is trending down, you do the opposite. You connect the low, you connect the higher lows like we did over here. How the price came, the price is just, you connect the, when the price is trending up, you connect the higher lows. When it's trending down, you connect the lower highs. So the price kept coming up to here, and then it come down, it'll come back up, but it won't come up as high as it did before. It'll come down, but it won't come back up as high as it did before. That's creating lower highs. The reason why we want to mark the highs in a downtrend is because we looking to get in at this level. We want to get in. If it's in a downtrend, I want to follow the trend. The trend is my friend. So I want to get in at that level so I can go down the hill, go down the stairs, go down the elevator, right? It's going down. I want to go down with it. I want to make money too while it's going down. You can make money in the market while it's going down. You can make money in the stock market while it's going down. When the price is in an uptrend, I'm connecting the lower highs. I keep saying that like a dyslexic person. So please pardon me. In an uptrend, I want to connect the lower highs. In a downtrend, I want to connect, and I just did it again. It's time to go to bed, y'all. Do y'all see what I'm saying? I can't even say it. Lower lows, Cedric. Lows. Uptrend, lower lows. Because you want to get in at this level of support so that you can take it to the level of resistance. Each time it got down here, it went up. Every time. Here it went up, here it went up, and here it went up. I want to get in at the bottom and on support in an uptrend. I want to get in at resistance in a downtrend. There we go. Jeez Louise. I was fighting for my life like R. Kelly in that Gayle King interview just then, trying to explain that to y'all. So y'all better be, y'all lucky I love y'all. And I hope y'all got it. Right? Let me know if y'all got it or not. Thank y'all for sticking through that. That was a brain fart. Somebody says the market is bearish as fuck right now. OG says appreciate it. Okay. So the purpose is simple. It's going to show you the angle of the trend and where the buyers or the sellers is going to consistently step in at, right? So for example, if the market keeps bouncing off the same upward stopping line, it keep bouncing off this line. That means the buyers are defending that area. The buyers are defending this area, this trend line area. Over and over again. So when that line finally break, like it did here, it tells you that the momentum may be changing. And sure enough, it has been. Sure enough, it did. It broke below it, and eventually it made its way all the way back up there and started to trade in that same range again. But yeah, that's a whole nother story. Somebody says, oh wow, I see what you're saying. You can zoom in when you turn your phone sideways. Yeah, Dez, I figured it out the other day too. So, you know, just let me know if you need me to sit still so you can do that if there's something you need to see for future references. Now, again, I want to tell you, I want to make sure y'all know when to use the trend line, right? So you want to use this whenever the price is clearly moving. It's clearly moving in a direction rather than chopping sideways. It's not really going sideways. It's clearly moving in a direction. No more ginger ale for me. All right, so let's see. These are powerful or accurate whenever you got 2 to 3 touches. I want to see the candlesticks touch this line 2 to 3 times. I want to see it touch the line 2 to 3 times. You can do it off the wicks if you want to, whatever. You can do it off the wicks. Just be prepared for the price to not come all the way up there if you do that. You know that, but that is a thing. You could also use the body of the candlesticks. Either way it go, it need to have 2 to 3 touches. We need 2 to 3 touches for this to be a valid trend line. Right? Remember that. It's most powerful when the candlesticks touch the price, whenever the trend line touch the price 2 or 3 times, maybe 3 times or more. 2 touches is going to create the line, but the third touch is going to validate it. You get me? Now, if y'all try to force a trend line where the price is messy, you're not reading the market. You drawing. You just drawing. You do etching, sketching and shit on the chart. That's not what I'm telling you to do. It's the 30-minute time frame. Let's come down to the 30-minute time frame. And the price is clearly respecting it on multiple time frames. This is a 30. Now, don't try to force it. Now we're gonna go to the next. The next one is the horizontal line. I'm gonna come up here to the toolbox and I'm gonna go to this small arrow and I'm gonna click on horizontal line. Right? And with this horizontal line, first let me get rid of all drawings. I don't want that. We're not on the trend line no more. Now we on the horizontal line. Right? And so what this is, it's just a straight line going clear across. Make it wide so y'all can see. This is going to mark a specific price level that matters. It matters. Let's go back to a 4 hour. Maybe, yeah. It's going to mark a level that matters. So for right now, I'm going to mark this level right here because it matters. Let's not even use, let's use SPY. Let's use SPY. Now notice how I got two horizontal lines. I got a line here and I got a line here. I use horizontal lines to help me mark support and resistance. Maybe you can too. OG says definitely getting me excited about this new information. That's what's up. Show them support and resistance. That's what I'm doing now, the crypto head. That's what I'm doing now. You right on time. So just know I'm not doing it because you said something, because you told me to. I got a problem with authority, crypto head, so I ain't gonna do it now just because you said. No, that's petty as fuck. I'm just playing. So look, horizontal lines help you mark levels that matter. Do y'all see how the price is acting like a? I'm gonna use this kitty ass analogy I always use. It's acting like a bouncy ball bouncing inside of in a house, right? It hit the floor, hit the ceiling, hit the floor, hit the ceiling, hit the floor, hit the ceiling, right? Or when y'all know them lyric videos where the where the ball be bouncing on the word, or them people who don't know how to read, so the word be like, the boy jumped over the wall face ass. So yeah, that's what it looked like to me. Either way it go, the price is trading within support and resistance when you mark the top of it and the bottom of it, right? You can pay it. This can help you out a lot if you can pay attention to this. You'll be amazed how much money people make from something as simple as support and resistance. The ceiling and the floor, the house, the structure, the market structure. Again, I use horizontal lines, but I could also come here to these horizontal lines and change the color of them. I could write on them and put what they are. I can come here and make them a dotted, change them, make them a dotted line or a solid line, right? Whatever. My point is, this is going to help you mark support and resistance. That's my whole point. Support is where the price repeatedly stopped at over and over again. Over and over again. Resistance is where the price stopped rising because the seller stepped in. So the market remembers these levels because who remember them? We do. The market remember these levels because we remember these levels. I trade on Webull. How do you do it when you top-down analysis? You start from a monthly time frame and work your way in. See, if looking at this from a monthly time frame, we are obviously like, we have been in a bull run. This is parabolic kind of. But this is because of AI and technology. That's why you see that steep incline like that. But anyways, this is it on a monthly time frame. I'm gonna come down to a weekly. Okay, and I see that we are in a range. We are at the bottom of the range, actually kind of broke below it, and we want to see if it's going to retest it this week coming up. We might actually be on the way to 650. SPY could be on the way to 650. Hey, what's funny is day trading your way to 650 that's not going to be as easy as swing trading your way to 650. You could get chopped up in these ranges. You know what I'm talking about? But either way it go, if SPY keep rejecting that level, I got off track. If SPY keep rejecting that level like we seen it do over and over again, and it's all in my head, SPY keep hitting that level over and over again. It's time for me to take my ass to bed, and it hurts so bad. All right, so look, if SPY keep hitting this level, and you recognize this level as support, or you recognize this level as resistance, and the price finally break below it, pay attention, because now this level becomes resistance. Do you understand? The ceiling is resistance, the floor is support, but the moment that the price breaks below the floor, that floor is now the ceiling, ladies and gentlemen. The floor is now the ceiling. Oh yeah, now this is resistance. This is resistance now. Now, every time the price gets here, you want to see if the price is going to break above resistance, because we got new levels of support now. It's all in my head. I think about it over and over again, and it hurts so bad. I'm gonna read online. It's right here. Look, these is new levels of support now. This is resistance. What does the blank gaps mean? What do you mean blank gaps? What you mean? Like, I put this gap here on a different time frame. Never mind. Disregard that if you talking about what I think. But if you not talking about that red rectangle, the blank gaps are fair value gaps. The gaps is showing you an imbalance in price. So I noticed that there's candlesticks missing the same way you do. Whenever you see that, the price will usually come back down into those gaps and fill them. It almost never fails. Here's the mail. It never fails. It makes me want to wag my tail. When it comes, it always, look, I need to go to bed, y'all. What do you think SPY will do next week? I'm telling you now, we want to see if it's going to break back into this range that we've been in for 3 months. But listen, y'all use horizontal lines whenever the price keep hitting the same level over and over. The lines is going to help you. So I don't got to guess. I'm looking at it. I don't have to guess what's going on. I see my lines here, right? Without the lines, you can do it without the lines. You can see the levels clearly without the lines. You don't need the lines, okay? It's clear to see that the price going sideways, but guess what? The lines help you, they help you. Obviously. These levels are entry zones. That's what I use them for. Hey, 676, 675 was an entry. I'm in a put already, son. But I'm also using them as stop losses, profit targets. It's a level that this came down from. That it's going down to. Hey now, say now. Hey now, say now. Look. Hey man, say man. Look, the price could come all the way back down to 650, son. The shit come back down to 669, B. It already did that here, son. You don't want it to drop lower than that, kid. It's gonna go all the way back down to 650. Gaps between candles can be when the market closes and opens again. That's right. That's right. What do you think? Okay, so yeah, I'm done reading the comments. All right, so look, we on to the next tool, because we know about trend lines. We done learned the trend line. We done learned the horizontal line. What will he think of next? All right, so let's see what we got. I'm gonna go here, and we got the vertical line. So this marks a moment in time, not a price, just a moment. I want to mark right here, because from this moment, we looking at a reversal. From this moment, the price did not go higher than this. This was the highest. This is the all-time high right there. We haven't reached that level again since that day. That's the type of shit that I use a vertical line for. We won't spend too much time on this. You just want to mark this you use this to help you use, like, okay, news came out this day. On this day, This the day that whoop the bam happened. This the day that, you know what I'm saying. Let me show you what I mean. Let me go out to even bigger one. Let's use the monthly again. There we go. All right, so I could take this vertical line and drag it over here and say, boom, this was Liberation Day. That's the type of shit I use it for. This was the day Trump brought up tariffs last year. Do you see why that's useful? Because what happened afterwards? So the goal is to study how the price reacted at that moment. Do you understand? No queen, no. But I would be a lie if I told you I'm not a financial planner. I'm not gonna lie to you. I am studying to get my Series 6 and 7. I do sell life insurance, annuities, and you know financial in let's say financial vehicles, financial investing vehicles, however you want to put it. Before that, I was just a brother that learned how to do this. Primerica. I ran into Primerica and got recruited, and I didn't do the bare minimum like everybody else that give that company a bad name. I actually was successful and still making money with them to this day. So that's who I'm sponsored for with, who I'm gonna end up doing all my financials with. Oh, I may have read that question wrong, Queen. This is Weebull. Yeah, this is Weebull. So look, use vertical lines whenever you are analyzing events. Now we're gonna go to the next one because, like I said, I don't want to spend too much time on there. I start talking crazy. I gotta go in a minute. We're gonna use extended lines now. I want y'all to know what an extended line is for. All right, so we're gonna go down to a 4 hour time frame again. I'm going to make this a little bit smaller than this so you can see why you would use this. Now, an extended line is kind of like a trend line. It's kind of like a trend line, except it goes all the way across the board, all the way across the chart. See, a trend line is not quite the same as an extended line because a trend line is going to be wherever the start and the finish at. You see, I know they're hard to see, y'all. My bad, I forgot. Pardon me. All right, yeah. So an extended line is gonna go clear across. So you can use that. It's like a trend line, but again, it stretches infinitely across the chart. Literally, this shit'll be here 5 years later if you leave it there. Crypto head, how about you show them break and retest and the difference between fake out? And matter of fact, crypto head, I like the way you putting together these algorithms. If you want to join my staff, man, feel free to hit the link in the bio, and I would love to have you help me with a couple of these classes and some of these lessons. If I'll screen you and make sure that your information aligns with mine, which is the truth. And then I wouldn't mind bringing you up, or you could be coming to Discord and help me teach people. I got a few other members on the staff. Shout out to the staff, man. Yeah, because you putting together this curriculum and shit like I don't already have one. Crypto head, crypto bro. Shit, why not? Yeah, bring your ass on. Because you giving me your insight. I could use that help, just not right now, right? I want to go over this so I can go to bed. Now, instead, because I don't have to do this shit, I'm doing it because I fuck with y'all. And y'all fuck with me. And if y'all didn't fuck with me, I would not do it. I swear. I make music and I go live when I make music, and it don't be 87 people in there, right? Because I'm not telling them how to make money. So now I'm about to make songs about investing. I bet I get y'all ass to buy my album. Then I bet you buy the album. Now, you using an extended line instead of stopping at the second point. Instead of me stopping here, I want this to continue forward automatically. This is going to allow you to see future areas where the price may interact again. Listen real closely. Extended line will help you see into the future. This is about the closest you're going to get to a crystal ball. An extended line is the closest you're going to get to a crystal ball. The price will usually follow the shit out of the line until it isn't, until it ain't no more. And the moment it don't, you will know because it'll break below that line or it'll break above that line, wherever you put that extended line at. Sometimes the price breaks below it just to return to it. Yeah. It's good for showing you where the trend line might act as support or resistance in the future. Now I'm done with that one. Like I said, we're not gonna spend too much time on them. I'm gonna go to the next one, which is Ray. Why would you want to use array? What is array good for? So this is similar to an extended line. Array is similar to an extended line, except let me change the color. All right, yeah. So you notice how I could change this? It still ain't the right. It still ain't the right width. I keep forgetting y'all can't see. All right, there we go. So array can be swooped around like that. It only extends on one direction. It ain't on the other side. Array only extends on one direction. Okay. It's like an extended line, but I don't care about the other side. I only care about going forward. It started on one point and it continue infinitely to the right. It ain't gonna stop. It's gonna be there forever to the right, right? So that's useful when you want to mark a level and see how the price reacts to it later in the chart. 669, we break below that, all hell could break loose. All right, so now we done with that one. I'm gonna go to the next one, which was going to be what's next? Horizontal ray. Same shit. It's basically a horizontal support or resistance level that extends forward forever. I can do it again, and boom, it's gonna do the same shit. It's just a quick way to make a range. Sorry, y'all, about the colors being automatically on white. I wonder if I can fix that. I wonder if I could fix that. I'll see. I'll see when it's not on y'all time. I'll figure that out. But yeah, it's just a quick way to draw support and resistance. It's gonna help you track how the price interacts with that level over time. Again, you want to use this whenever marking important levels that you expect the price to revisit again later on. Okay, and now this is where it gets a bit confusing for some people. So I'm gonna go real fast over this one. Because this one would require me to spend 3 hours on. I would have to give y'all a full master class on how to use this shit, but it's okay. I'm about to do what I can. I'm gonna do what I can. So right here we got the Fibonacci retracement, the Fibonacci extension, and the Fibonacci time zone. Let me get a follow. Hit the follow button, y'all. Hit the follow button, y'all. Although everybody knew, hit the follower button before I continue. If you've learned anything, please do me a favor. Do me a solid one and hit that follow button so you don't miss another live stream. I should be saying congratulations. You made it to the Ironworth Trading Academy. You didn't have to pay shit. It was free. All you had to do was pay attention. You didn't have to spend no money. All you had to do was spend time. Logan Steffen, struggling with bills. Get your ass out of here. Not because you struggling with bills, but because you said first 5 people that struggling with bills to message him blessed. What is you talking about? I'm gotta get you out of here. Y'all don't listen to him. I hope y'all not stupid enough. Nah, ain't nobody in my chat stupid enough to message him and say no damn blessed. Yeah, I ain't got no moderators in here right now, I guess. All right, it's cool. Now, Fibonacci retracement. This is a measurement tool, okay, that finds possible pullback levels, right? A Fibonacci retracement tool finds possible pullback levels. You blocked him? Thank you. Chase, I forgot I had you in here, Chase. All right. Can y'all hear me still? So I can give y'all a master class on it, but I don't really want to do that. So the first thing you want to do is, if we in an uptrend, you want to spot an uptrend, right? Boom, it's the uptrend. If the price is dropping sideways, Fibonacci becomes meaningless because there ain't shit to measure. This tool measures pullbacks within the trend, not random movement. Okay, so if you can't visually point to a strong move, do not touch the Fibonacci retracement tool. Do y'all understand? If you can't point to a strong move, don't touch this tool. It's not gonna help you. It's not gonna help you if you can't. So you want to choose the swing low and the swing high. You want to choose the swing low and the swing high using this tool. A swing low is the lowest point before the price began to push upward. A swing high is the highest point before the price started pulling back. These 2 points form the move that you are measuring. In an uptrend, you drag. Let me do it again. In an uptrend, okay, but this is more like a downtrend, so it's all right though. I just want to teach you something, so it's okay. So in an uptrend, you drag the Fibonacci tool from the swing low to the swing high. I'm gonna take this tool, the Fibonacci retracement tool. I need to make it white. I'm gonna take it from the recent swing low up to the, and it still came out red. Stop fucking playing with me. Playing in my face. Weeble. All right. So yeah, in an uptrend, that's how you do that, right? I take it from the swing low to the swing high. In a downtrend, you drag it from the high to the low though, okay? Now, this single action automatically draws these retracement levels on the chart. Hold on, I can't see what y'all saying. Somebody says, "Yep, I'll be here every night." Thank you, Chase. So yeah, it automatically put these levels, and if you notice, the price is like literally reacting at these levels. Y'all watch me put this tool here, and I did not mark all of these lines. I tapped 2 times, the low and the high, and it put all these lines there. Now, what you are doing here is telling the chart, measure how much of this move is going to get retraced. I need you to understand, like, once you place this tool, several horizontal lines is going to appear on the chart. These are potential reaction zones. Now I'm done. I'm going to give y'all a whole, if y'all want to learn more about the Fibonacci retracement tool, go to YouTube, or I'll get with you outside the live stream, but I don't want to waste too much time. So we'll go to the Fibonacci extension. But to let y'all know, when you dealing with the Fibonacci retracement, you want to wait for the price to react at a level. Okay, so these lines themselves are not signals. They just areas to watch very carefully, right? The first possible thing that can happen is a bounce, like it happened here. And then or it happened here, right? Or a pause could happen, like it happened there. Several things, right? It could either bounce or it could pause or it could break through. I'm still ended up giving y'all a cram course on Fibonacci retracement, and that's not what I want to do. So I'm gonna go ahead and move forward to extension. So now, while retracement measures the pullbacks, the extensions measure the targets. Oh, wrong one. Wrong one. Wrong one. Wrong one. Fibonacci extension. So the retracement measure the pullbacks, the extension measure the target. So extensions estimate how far price may move after a breakout continuation. After a breakout or continuation. Okay, so now you might have 128%. Look at all these you have 127%, 161%, 200%. So you want to use the Fibonacci extension when you want to estimate profit when you want to estimate profits targets during a strong trend. We don't have a strong trend right here. Let me find one. This cool right here. And the price, the price reacts to these levels. I find it actually amazing, which makes Fibonacci amazing. The time just went up 1 hour. It did? Oh yeah, I'm about to really get the hell off. I've been on here for 3 hours if I don't. But yeah, Fibonacci in nature itself. If y'all never heard of the word Fibonacci, just go do some research on the Fibonacci sequence. I don't want to nerd the fuck out on y'all right now, but I think Fibonacci is amazing. The way it just works, everything just fits into a pattern. It is amazing. All right, now let's go to the Fibonacci time zone. This tool attempts to measure time cycles in the market using Fibonacci intervals. So, according to my calculations, let me make it even more accurate. According to my calculations, right, using the Fibonacci, using that tool, it just helped me realize areas where the price could just switch from going from a downtrend to an uptrend to a downtrend to consolidation to downtrend. You know what I'm saying? So instead of predicting price levels, it predicts when volatility might increase. That's what this is for. This is not really used by beginner traders because timing the market is very hard to do. It's harder than measuring the price. Right? I'm gonna go to the next one though. I'm not, I ain't finna be on here all night. Let's go to the next one. Right here, we got parallel lines. Parallelogram. Not parallelogram. Just my favorite word. Parallel though. So you got this parallel channel tool, and this is going to create two trend lines moving in the same direction. Boom. I can use it for stuff like measuring a range. Boom. It was real easy to make that. Y'all get the hang of it too. Practice paper trading and making trend lines and shit. It'll help you out. Just practice doing this. Practice using these tools, right? And it didn't do it. Stop playing with me. I can't stand when they act like this. It's okay. Y'all get the gist of what I'm saying. It creates the channel for you. I wish it just would stop being red and skinny. All right. So that's what the parallel channel for. It's going to create two trend lines moving in the same direction. One line is going to mark support. The other line going to mark resistance. This creates a channel where the price is bouncing inside of that channel until it ain't. And boy, oh boy, we've been pretty much in that channel. It's sloppy, oh, but we've been in that channel. We haven't been now. This is a clear indicator. This is bullish. This is not bullish. This is bearish. The fact that we not in that range no more, right? This is bearish, but we still got to break below. What's this? 660, 670. I would say 670, but you can say 660 because that's the previous level. If we break below that, we going to 650. All right, it's been a long night. What else we got? Parallel channel. We got the polylines. All of these different tools have different reasons, y'all. That's why I wanted to go over most of them and teach you what they for. A lot of them have different reasons. The polyline. It's going to allow you to draw multiple connected lines. Boom, 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 boom. This is what a polyline help you do. That's all I did. All right, so this is for marking patterns or structures, okay? Triangle patterns, head and shoulders patterns. You want to make sure that this is really in a I might want to use it to draw a flag pattern or don't do this, y'all. This is a fucking a mess. Okay, hold on. Let's go to a small time frame. Here we go. All right, so you can use this for like, you just want to mark the structure. That's how I want to see if it's going to continue to do that. So I use a polyline for something like that. I really personally use it to show people where I think the price finna go next. That's what I use it for. But that's not what it's for. You want to use it to mark patterns or structures like, I don't know, wave structures or, chart patterns. But this ain't a good example. So don't go off this. It's not a good example. I don't know if it's because of the time frame I'm on or what. There we go. It's doing it again, Houston. Houston, we have a problem. All right, here we go. I'll use it on this one. So something like this. Let's say you wanted to draw a flag pattern so you can see if the price gonna come inside of it or not. That's the type of shit you would use it for. I spent way too much time on that one. I don't like the polyline on Webull because why the hell you got me all over the screen when I put one thing here? Now I can't take it off. I don't like using the polyline. So out of all the ones I showed y'all tonight, good luck with that one. Good luck with that one. Now the rectangle, I use that to mark my gaps. I come here to the rectangle tool. I use this to mark my gaps. Look at this big ass gap here. And sure enough, the price ended up filling that gap eventually. That's what I like to use the rectangles for. Like I'll draw another one here because I see a gap here. And so I'm looking for the price to come back inside of there. It's good. This is good for marking ranges, or you want to mark a spot where the price is consolidating that and you trying to show people like, okay, look, the price is obviously, it's done going up. It's done going up. We didn't reach the top. Three-month time frame. So look, here we go. I'll use a rectangle like this. To show you that the price is consolidating right here real heavy. And that we are no longer doing that. We was in this range. We were in this range for 3 months. And we are no longer in this range. We might go back into it Monday. Oh, that's how you do it. Oh, we just figured it out together. That make me feel so much better. So, every time you wanted to stay on one color, just press apply to default. It's been in my face this whole time. Anytime you wanted to stay on one color, when you draw on your trend lines, click apply to default, and it's going to automatically be that every time you do it. I just learned that just now, and I've been trading Webull for a long time. So, yeah, I'm glad I learned that with y'all. So, yeah, now the price is now not in that range no more. We want to see if it's gonna go back inside this white box, this white rectangle. Traders call this consolidation. This is consolidation right here. Eventually, the price breaks out of that range and continues trending in whatever direction it's going. It might go. In this case, if it stay out the range, it's gonna keep trending down. It's gonna break out and it's gonna keep going down. We want to see it come back up Monday to 675 and stay below 675 before we turn bearish and just say it's time to buy puts, right? Because if not, hey, we could see this go all the way back up to 690 like it did the last 4 or 5 times. Anyways, you want to use the rectangle tool to highlight areas where the price is stuck between support and resistance. There's many other tools on here, y'all, but yeah, I think I'm just gonna skip all the way to long position and short position. That's what I'm gonna do. That's what I'm gonna do. So, matter of fact, I should have kept that there. I'm gonna show you what I mean. So let me show you what I mean. I'm gonna go back here to horizontal line, and I'm gonna put a horizontal line here because I want to show you my idea. And I'm gonna use the short position tool. You go to the short position, and I'm gonna show you what my idea is. All right, now this is my idea. My entry, yeah, my entry about up here. I use 674 as an entry. Don't gotta be perfect, but look, this is what I'm doing. I'm showing you that if the price, I'm getting in at the white line, and I'm expecting it to go all the way down here. This is my profit area, and then this little small red area, you probably can't see it that much. Yeah, you can't see it that much. It's okay. But look, this little small area, that's my stop. That means if the price comes to, what's this, 676, I'm getting the fuck out the trade. I got in at, what's this, 674. If it gets to 676, I get out automatically. But that's a predefined stop loss. I'm just using this tool to see it on the chart while I'm trading it. That's what that's for. You can use the same thing, go in the opposite direction. Let me show you. I can use the long position. That was called short position. This is called long position. Let's say I think the price finna go back up. I can get in the trade here and say that if it goes down here, I'm getting out. But my target is the next level of the previous level of resistance. I think the price finna come all the way back up there like it did the last 3 times. That could be my trade. You understand why you would want to use these two? These tools are handy. They come in handy. All right. So I'll edit this video so that you guys can watch the replay on YouTube if you came in at the end of the show. Other than that, man, I've been on here for 2.5 hours. I appreciate y'all for tuning in. It's now 3 a.m. It's been a long night. Some of y'all probably sleep on me. But other than that, I appreciate y'all for tuning in. I'll catch y'all tomorrow. I'm gonna go live again. Not tomorrow, today. I'll go live again later today. So it's Sunday, 3:17 a.m. March the 8th. We already made today twice as good as yesterday and half as good as tomorrow. You welcome, Mimi. I got a little fatigue toward the end. That's so, yeah. Start stuttering and mumbling and shit. I apologize, but it's okay. I know y'all still learned. Y'all still learn, but I'm starting to get that fatigue that you get from going live. Going live will drain you. All my live content creators, y'all know. My live streamers, y'all know. To my aunt getting tired. Yeah, nephew. Your nephew. So yeah, y'all enjoy the rest of y'all enjoy the rest of y'all day. I will be back 11 p.m. Y'all meet me back here 11 p.m. today. Sunday 11 p.m. Meet me back here. We're gonna go over the futures. They're gonna be open. Show y'all how to paper trade. I'm gonna teach y'all a little bit about futures. We're gonna have a futures class tomorrow. Y'all want to learn futures? Meet me here tomorrow 11 p.m. Yeah, Chase. Come back. All right, I'll see y'all then. Okay, Mimi, I'll see y'all then. Stinky, you always come to the show.